Hey guys, I want to drop a few ideas on this video. I know I've been popping in and out of this channel like a ghost. I hope you guys still appreciate the content nonetheless. And do leave some comments down below if you find these useful. So the first thing that I want to point out is gold. Okay, gold is a couple of days ago, there were actually like news to say that it was gonna go on for its position for 2000. So when you get news like that, and if it does actually happen, then you definitely want to, set some greed caps and get out before it actually does. So never try to ride it all the way. Gold is a very, very volatile instrument. As a matter of fact, I don't actually recommend trading gold in these recent times unless there's a price crash. So now that the price crash has happened, you want to look for it to find its footing. Look for some divergences in the bottom in this region, and once you find some divergences, you want to target like a 50% recovery or a 38.2% recovery, and that's going to happen quite fast. So I would say that based on how much it's dropped, once we see some divergences in place, we can target for a take profit around the 1960 region. And another thing I want to add about this is that when you look at the news, very often what will happen in reality is the total opposite to what the news will say. So if the news is saying that, it looks really good for gold, it looks really good for Bitcoin, it looks really good for whatever. I mean, it's just the opposite. The opposite is going to happen. Just observe it for yourself. That's why there's an old trader saying, like, buy on rumor and sell on news. By the time the news is saying it, everyone's already out. So just take note of that. Anyway, this is a really, really good opportunity right here. But again, I want to remind, if you're doing gold, do so without leverage is best, because the swings of late are crazy. Okay, now the next thing I want to cover is the DXY, dollar currency index. Okay, and what is noteworthy about this is that the DXY has for a very long time had correlation with negative correlation with the Bitcoin. So but recently that has been otherwise. So even before the DXY began to drop, Bitcoin was already going up. So this time the sync is a little bit off, and I personally see something here because we do know that in the beginning of the Russia-Ukraine war, Russia has been divesting their holdings of Bitcoin in order to purchase ammunitions, supplies, and so on and so forth. And now, if we look around, like, fuel prices are stabilizing in many different places, and also the technicals of Bitcoin is looking really good, because lately we had the Bitcoin conference. And also, more importantly, there are a lot of developments, particularly in the Lightning Network, and that is able to bring a lot of sense of utility to Bitcoin. And there are many big holding places like Luna and even Tesla. They're getting into more mining operations and so on and so forth. So the legitimacy is coming up a lot, and the technicals for Bitcoin have been looking, the fundamentals have been looking really, really good for a time. And what's really just overdue at this point is to resume its way up to 70,000. Okay, so that's something else to look at. Now, I want to chime into some currencies. Okay, so for currencies, I just want to leave my comments with regards to the USDJPY. And a lot of people, and even myself in the past, have looked at this currency and thought that, hey, this is really good pair for short-term trading. And yes, indeed, it still is very good pair for short-term trading. And the reason for it to be good pair for short-term trading is because the movements are typically, very small and controlled. However, in the macro scale of things, we also do see like what a massive bull run has been happening, or rather, the yen has been weakening against the US dollar for a very extended period of time, and actually it's getting kind of worrisome, because if we look at from the time of, oh come on, where's that crosshair? Okay, I'm just trying to get that crosshair to work. All right, so from October to now, it has never actually looked back, and that is kind of worrisome. Well, we do see like a real big peak over here, and as usual, I would think like some kind of correction will happen, and with if everything were to turn out well, it would probably have a correction down to 116. But precisely this is the reason why, for those people looking into the dollar yen as a instrument for forex trading, like bots trading, well, I've learned in the past that this is not a good approach, and I've learned now as well. And I want to share a finding with you guys that like this is a much more favorite pair, much more favorite than Euro USD. There is a lot of nice surges up and down in the Euro USD, making this also a fairly good pair. But I would think that, I mean, this is actually my favorite for now, simply based on the fact that, based on the movements that happen, and we look at the percent retrace, the percent retrace of the pound USD is still by far one of the best in the market. So I actually highly recommend this pair for anyone doing like grid trading, bot trading, because of the way it pulls back. So again, keep your sizes reasonable, because with reasonable lot sizing, you can still get a good opportunity in the long term, simply because of the fact that at some point it's going to pull back really strong. And if you've experienced frustrating situations on other pairs, I would say this is like a lost case. Imagine how much money you would have to put into an account in order to withstand such a heavy overextension. And I would say, it would just be stupidity. So imagine if anyone was grid trading this, or martingale trading this, you would be injecting funds and injecting funds and injecting funds, and while the lot sizes are piling up, you're wondering where's the end to it. So that's one insight I want to give you. And something that you can do is you can also put a comparison on it. So you can do I would say a new price scale, and let's just for comparison's sake, you can see, yes, we do know that these are negatively correlated, but you can see the movements that are taking place, and that in itself is it shows you how awesome, or rather how lacking this particular pair is. Okay, so that about wraps up my very short video. And at the same time, I would also like to draw your attention to my previous video on the 6 seconds of trading on the Pocket platform. Sorry, not 6, it's 5 seconds. That's on the OTC. Want to give some reminders that the OTC market is essentially human driven, and it's algorithm based, that would do their own calculations on the price movement. I would not suggest that the Pocket option OTC is a man-made, no, sorry, it is a, what do you call that, is totally distanced random construct, like the volatility indexes on binary.com. But I think the best way forward is really not to be a big fish as always, just to be a small fish, and if anything at all, just experiment. So if you're doing well at one $1, $5, $10 trades, go up to 50, go up to 100. And at a certain point where you find that, you know, the same thing that you're always doing is not working anymore because of the size. Do keep your own records. Whether, I mean, are you, first and foremost, are you trading soundly? Are you trading in the same method? Are you trading with discipline and observing a similar frequency? You're not overdoing it. And if everything remaining equal, you find that with bigger sizes, the accuracy goes down. Then you actually want to scale back down on your trading sizes, because if the OTC market is to be based on algorithm, and algorithm is based on trading behavior, then definitely you know, what you're going to notice is that it's way better to be a small fish than to be a big fish. So I hope this video finds you well, and do check back this channel from time to time. I'm not sure how often I'll be posting, but I just felt that I wanted to, you know, give my 2 cents worth on a couple of things out here. All right, and bye for now.